Good morning, traders, and a happy Wednesday out there to everyone. Wanted to let our morning ADP figure settle in there first so we can let that all pan out for itself. And as we know, today will be FOMC day, so we will have that to certainly consider. As we know, that'll be due out at 2 o'clock Eastern there today, and then 30 minutes thereafter, they have their press conference. And then outside of that, as far as the economic calendar is concerned for today, we already got the ADP out of the way. And then just to be aware of, you'll have a final manufacturing PMI at 9:45 and JOLTS and manufacturing ISM PMI at 10 o'clock Eastern, respectively. And then one other item to be aware of, a little bit more so on the fixed income side of things, is that we do have this Treasury borrowing plan that's set to be due out at 8:30, and that should be a fairly significant one there for the bonds. So good to make note of that. So what we'll do is hop into these charts so we can start to make some coverage beforehand, so we can get all these points of interest framed out for ourselves before getting into our data point and such. So we'll begin things off here with that of our daily S&Ps, which we know had formed their 3-bar balance mode and had a mild showing yesterday. So yesterday's high being up there at 42.15. In the overnight session, we've had an inside range, 41.91 and a quarter being the overnight low, and 42.11.50 as being the overnight high. So as far as the daily charts go, keeping it contained in the overnight session. Still would want to be aware of, since we just came up there and tested it yesterday, that 42.15 in case we do want to give any further retest there, just as far as movement out of the 3-bar. The only other item to consider is that it was also our first close on the other side of the 5 SMA, so just some initial areas here. We have 42.15 as the previous day's high to bear in mind, and 41.77 and a quarter. Down below would be this 5 SMA. So as far as our daily configuration, that's a bit of the rhythm that we have going on there. However, when we come over here to the intraday data, in this case we have the 240-minute display. I'm just going to include a couple more data points here so we can get these calendar channels a little more normalized. But either way we slice it, we could see we've opened up with some better rhythm here on our oscillator. So in the overnight session, or starting yesterday, we did proceed to give ourselves a more of a 2-part wave, an A, B, C, if you would, up on the 240-minute time frame. And what we'll want to be aware of here, of course, yesterday we did give it a good test, so 42.15 just from being the previous cycle low would still be of good value for us in case, like we said, we got any follow through or wanted to trade closer towards the previous day's high. Any further up from there, we would be dealing with, just have a little blue box around this zone because that's also near the pit session gap area. And these zones might not be coming into sight right away. We do have the FOMC later, so we'll have that to bear in mind. That 42.48 would bring us a little bit closer there towards the gap area that looms out there above. So as far as the ES goes, we got some points of interest up above. As far as down below, in case we have any adverse reaction there, really would be looking down there at 41.77 as being that 5 SMA there, as well as if we had any deeper down, you got the previous day's low, which is a little bit of a ways down there, but that's 41.66 change. So that's there for our S&Ps. Over on the DAX side of things, so we can compare the DAX. At least in the case there, we were able to trade above the 14,924 from yesterday's trading. So we traded above the previous day's high. However, in the early morning session, we are bringing it right back. So we've seen some trades on both sides here of this PD high, the previous day's high, 14,924. So that should also, serve us quite well. Over here on the intraday display of the DAX, I have the 120-minute time frame up there, but really helps to showcase the fact that we have been building ourselves out somewhat of a sideways line or a small range that we've been building out as of late. Several data points down below, 14,750, which we've been doing a fairly good job of defending there. And we can see we've already kind of worked off some of this feeling of the hourly chart showcasing some mild loss of momentum. So that has already panned out in the overnight session. So they proceeded to bring it back up with some footing. So DAX might be a bit more rotational in these early morning session, but what we'll do here is just drop it down to more of a 5-minute piece of data, just so we can monitor up against the S&Ps, both of which came down, made their full retest and are starting to get back in sync. So we'll see how that DAX wants to move around in the early morning session there. And moving outside of our index future group, we have that of the euro currency, which, as we know, had quite the range during yesterday's trading, widest range of the past 7 trading days there. So we know that we got the follow through, traded above the 1.06465, and then we proceeded to give back all of that progress that we had made in that overnight session from yesterday. So another version of the sharp up and sharp down, or along the lines of the test reject. So what we'll have going on here with this euro currency is the fact that we're already well below the previous day's low, and you can note that we have all these tails down below in the euro currency, so perhaps not as well defined there on the daily charts, but as we come down to the 120 here, we might want to be aware of on any type of further down here. We would be dealing with 1.055 there in the case of the euro currency, and that should serve as a nice data point there, just simply because we have had several tests in that region there in the past and not too many closes there. We had left many tails down in that region, so viewing that as a zone of interest there as far as the euro currency goes. Hasn't really formed any signs of hourly buy divergences or anything as of yet, so still remaining under some pressure there from yesterday's high to low activity. And the gold, which had the very interesting formation, forming the 3-bar balance mode at the top of the swing after having been on the extended run, so kind of like the opposite of the S&Ps, the first close below in the case of the gold. We have 2007 there. As the 5 SMA, 2000.7. So we'll want to have that one on the sheets there. Outside of that, this is one that had some action overnight, so we did have a bit of an hourly or 30-minute, buy divergence kind of already pan out in the overnight session, just in reference here to our oscillator in the lower panel. So we've already gotten our lift back up. We've already reverted back to the mean there, in which case that overnight low will be quite substantial there for us. We can come in here and mark that off with a bit of a yellow line. And then as far as any further up from here, like we said, we already reverted back to the moving average. So any further up from here, we would be dealing with the point where we had formed the U-turn, right? Our failure to make the full test up and then starting to come back down and slice through this 2002.8. So if the gold reaches up any further, for one, you got the 2000 round figure, and then this 20002 here, just from being the top part of that previous little U-turn zone there as far as the gold goes. And we're just making it a little more speedy here today with our coverage, just because we do have that treasury borrowing plan that might be a little bit more substantial. But with that said, we have the crude and the bonds to wrap things up here. In the case of the crude, we did have our 2 days of nice high to low trading. Right, overnight we've been keeping it as an inside range bar. What we'll want to note is that we have that 2-period rate of change flipping up today after having 2 days of high to low, so a pretty good showcasing of some action there in the overnight with the crude. And as we come up any further, we'll be dealing with two things. One being the 5 SMA there at 83.09, and two, you'd want to be aware of, if I can get this here, the previous day's high in the crude. You do have the EIA data today, the report for the crude, so that can also add some extra gyrations, but essentially, they did not trade below the previous day's low. They got that 2-period rate of change flipping up there for the first day, so they're giving it a pretty good attempt. They've actually carried the ball a little further than what I would have originally expected there. So between 83.30, 83.37 there, previous day's high, as well as the 5 SMA to keep an eye on there as far as the crude goes. But not too bad. Remember, it took a little time for it to escape this 4-day bounce that it had, and just because we're getting counter counter-reactive lift doesn't necessarily mean we're really coming back into that zone as of yet. That would be closer towards that 83.37, all these overlapping bodies of the bar there. So not too bad on the crude. And then lastly here, before we get this treasury borrowing plan or deal to come out, is that of the bonds, which for one, yesterday we did see that we brought the yields back into that 5% mark, so we had a bit of a pretty large gap on the yield just from the day session there. So we gapped down, opened beneath the 5%, then proceeded to trade low to high in the yield or high to low in the bonds, and then we closed them right on the other side of 5%. So as far as the yields go, still having some good play around those zones. And then, need these bonds here. There we go. I was going to say, outside of that, we know that we also proceeded to leave one pretty sizable tail there during yesterday's trading out of the 3 bars, so no real major range expansion. It was more of a test and reject, so would like to watch this 2-day low here. Get this marked off properly. I think that'll be a point that would serve us quite well if we ended up getting down there. That's 108.16 there, the 2-day low, as well as a we came pretty close to testing it during yesterday's trading, and as we'll see here on the hourlies or the 120-minute display here with these bonds, is that we have been forming some nice balance here. We fell short on taking out that previous swing high up there at 110.16, nor did we get too far down, in which case we have that 108.16, and a little bit further down there, 107.30 in the case of those bonds. So we'll see about those yields. That's another way of looking at those fixed income markets there, as we kind of twirl on both sides of that 5% mark. But with all of that said here, we're going to dial these charts back up. We'll have Damon coming in another 30 minutes there, and I'll tell you, he's got a very good feel there for those FOMC days, so that'll be something nice to look forward to there. And then we'll see what these bonds want to do here off of this 830 figure. It's supposedly supposed to be a well-anticipated figure there. So in honor of that, I'll queue up over here on this far right-hand side that same bond chart so we can see how they handle their morning data point there. So we'll let that all settle in and see what we have lining up for ourselves shortly thereafter.